It's official. The SpaceX S-1 is no longer confidential as Elon Musk plans to take the company public at a valuation of $1.75 trillion. After the company lost nearly $5 billion last year, SpaceX will be listed at a valuation that can't be rationalized by even the most ardent Musk apologists. Only in 2026 can a company losing billions, promising AI in space, and rewriting the stock market's rulebook be rewarded with a $1.75 trillion valuation. This is the dumbest IPO in history, and that's exactly why it's going to go flawlessly. The recently filed S-1 shows a bleak financial picture for SpaceX. Launch services lost $700 million in 2025, and the AI business lines lost $6.4 billion in 2025, and another $2.5 billion in Q1 of 2026 alone. Only Starlink showed a profit of $4.4 billion. The disclosed consolidated financials for the entire company show a $4.6 billion loss in Q1 of 2026. Even if you choose to believe the optimistic accounting, SpaceX claims to only have about $100 billion in assets. So the cash flow stinks, the balance sheet is a wreck, and the valuation is ketamine-fueled. But wait, it gets worse. The S-1 also shows that Musk will control an estimated 79% of the voting rights, eliminating all pesky board and shareholder oversight. Because of that voting power, he will have no checks or balances on his control of the company, despite owning less than half the equity post-IPO. He will effectively be able to negotiate his own compensation, stock options or grants, execute mergers or acquisitions, and pack the board with sycophants. And yes, this structure will make it easier for Musk to roll Tesla into SpaceX with almost no friction, the same way he saddled SpaceX with his failing xAI. And before the stands get all up in the comments section about the wonder that is xAI and how dumb I am for not understanding, your messiah himself told the world that xAI was a failure and needed to be rebuilt from the ground up. Post-IPO, shareholders won't hold rights with any teeth. Not only will he control the equivalent of 80% of the voting rights, if you want to sue the company as a shareholder, you can't take it before a judge. You are forced into mandatory arbitration. The S-1 mentions AI more than 1,000 times, yet its AI products are losing the most amount of money and generating the least amount of revenue. This is where the S-1 spins up the distortion field of ridiculous promises and forward-looking statements. Future applications for xAI include a bigger and more robust Grok model, the same product that barely generated $500 million in 2025 while losing $1 billion a month. xAI for business? As if Anthropic, Microsoft, and OpenAI are leaving market share on the table for an AI model no one uses now. And of course, data centers in space, which has been soundly debunked as technically unlikely and monumentally less efficient than terrestrial data centers. And just for fun, I'll include the S-1 doubling down on Mars colonies and the promise of point-to-point rocket-based travel. I'm sure those rocket trips from LA to New York will be available right after the new Tesla Roadster starts shipping. So yes, on the face of it, this IPO is packed full of dumb. But none of what I just ran through is what makes this the dumbest IPO in history. You know, one of the best ways to support small YouTube channels like mine is to subscribe. If you like the content and you'd like to see more of it, consider subscribing. Back to the episode. The reason this is the dumbest IPO in history is because it's going to be successful. That's right. Despite the dismal financials and the ludicrous valuation, SpaceX will likely generate somewhere between $50 billion and $80 billion through this offering. Here's why. First, we need to acknowledge the power of the Elon trade. We've watched Tesla routinely trade at PE and price-to-sales ratios never before seen, all because Elon baits the market with wild promises of revenue capture, new product launches, and untapped potential, most of which never comes to fruition, but by the time anyone realizes it, it's too late. And with the amount of institutional money invested in Tesla, that stock price stays elevated, far beyond any reasonable market value. This Elon trade also translates into private markets, where he raised more than $40 billion for xAI on tepid revenues and sluggish market acquisition. And when the private money ran out, he offloaded it on SpaceX. He also raised about $7 billion for SpaceX after committing just $100 million of his own money. And let's be clear, it's not just the Musk fans that want in on this. This IPO is being run through 21 different investment banks, all of whom guarantee distribution. And these IBs agree to purchase shares at a, quote, underwriting price. Then they allocate those shares internally to their own investors, marked up to the agreed upon IPO share price and make what's referred to as the spread between that discounted underwriting price and the IPO price. Investors who buy at that IPO price are hoping for a huge increase in the share price after the IPO happens. Second, and maybe most importantly, the Nasdaq changed its rules to secure the SpaceX listing. SpaceX will be listed in the Nasdaq 100 index 15 days after the IPO instead of the customary 12 months. I'll link the episode I published recently that dives deeper into this rule change, but here are the cliff notes. The Nasdaq 100 index tracks the largest non-financial companies in the exchange. There are massive ETFs and index mutual funds that trade exclusively Nasdaq 100 stocks. And once SpaceX is listed in that index, all those mutual funds and ETFs start buying it at any price almost automatically. It's estimated that this fast tracking into the Nasdaq 100 will create between $35 and $50 billion worth of forced buying by index funds and ETFs. But the Nasdaq didn't stop there. They also waived the 10% float rules for SpaceX, which means that SpaceX won't be required to have at least 10% of its shares freely trading on the market. Limiting that supply coupled with forced buying from index funds could create support for a high share price. Wall Street has a shitty term for retail investors. They call them dumb money. Yes, it's meant to be derogatory and helps hedge fund managers keep their inflated egos, well, inflated. But the context of the term is based on the belief that retail investors have less information, less resources, less multi-million-dollar analysis of publicly traded securities than professional fund managers and investment firms, and therefore make less informed decisions around investing. It's not so much that retail investors are actually dumb, it's more like structural ignorance. They buy a stock or a mutual fund because their broker tells them to, or because they like day trading, or got excited after watching Jim Cramer pop a blood vessel screaming about the future value of some shiny new stock. And it's that dumb money that's going to save this IPO. If you take a second to consider the downsides to going public, more regulation, more reporting, investor and shareholder calls, public market scrutiny, legal requirements, limitations around forward-looking statements, the cost of getting a company ready to go public, the dilution of ownership, and even the $500,000 in annual listing fees, there are plenty of reasons to stay private. In the case of SpaceX, they really don't have a choice. Only public trading can save it. Private investors will lose, or already have lost, enthusiasm for funding a company that is all sizzle and no steak. A company that lost $5 billion last year, and maybe more than that in the first quarter of this year alone. They're likely to see through the promises of data centers in space or hallucinations of a $28.5 trillion total addressable market for AI, supposedly ready to be served by an AI product that Elon himself said needed to be, quote, rebuilt from the foundations up. SpaceX will raise $50 billion while losing money, making promises it can't keep, and leveraging an index fund rule change that essentially forces people to buy it whether they want it or not. It's the dumbest IPO in history, and that's why it's going to go perfectly. That's it for this episode. As always, like, comment, and subscribe, and we'll see you next time.